Are you on the hunt for a straightforward yet lucrative scalping strategy to navigate to the financial markets? Curious about pinpointing the optimal moments to enter and exit your trades, ensuring you keep your losses to a minimum? If you find yourself nodding along to these questions, then you've come to the right place. Stay tuned and watch this video to the very end. We promise it'll be worth your while. So open up the gold chart on the TradingView website. Now select the 5-minute time frame. Next, head over to the indicator sections on the TradingView website and search the comma and add the L2 Perry Kaufman Adaptive MA indicator to your gold chart. Now that we have the comma indicator on our chart, let's dive into its settings and follow as long as I adjust the settings to fine-tune the signals it generates for increased accuracy. Let's get started. Now, by making these changes, you can trade with the indicator. But in the thrilling world of trading, there are times when the signals from an indicator needs to be filtered to elevate the win rate of a strategy. To accomplish this, I plan to employ another indicator to either confirm or reject these signals. The tool of choice for this task is the McGinley Dynamic Average Indicator. Now, let's dive into its settings and make some adjustments. The McGinley indicator essentially serves as a confirmation for trades in line with the market trend. It operates on the principle that the formation of price candles above McGinley line signifies a stronger buying power. While the formation of candles below the McGinley line indicates a stronger selling power. Therefore, the trading rules will be based on this principle. For a buy trade entry, we wait for a buy signal from the comma indicator. If a buy signal appears on the chart, we then examine it with the McGinley indicator to ensure that the buying power is dominant. If the signal meets these conditions, we consider it confirmed and enter a long trade. Next, to protect our capital, we need to set a stop loss for the trade. I recommend using the recent swing. As for the target, you could set it at 1.5 times the risk amount. And for sell trade entry, we keep an eye out for a sell signal from the comma indicator. When a sell signal emerges on the chart, we scrutinize it with the McGinley indicator to confirm that the selling power is in the ascendancy. If the signal fulfills these criteria, we can deem it as verified and initiate a short trade. Following this, to safeguard our investment, it's crucial to establish a stop loss for the trade. My suggestion would be to utilize the recent swing in this strategy. Regarding the target, a feasible option would be to designate it at 1.5 times the risk. But remember, you can apply this strategy to various charts and reap profits. For instance, this is a 15-minute Bitcoin chart. You can see how effectively fake signals are identified and eliminated, and high potential signals are confirmed. However, if you are still unsure about which strategy is the best to start with, I recommend watching this video. And if you are interested in learning the exclusive TradeGenius team strategy and benefiting from our 6-month support, don't hesitate to respond to our Telegram link provided below.